bit of a breather.
Yeah.
I think Friday was good. Actually, the last 3 days, right? Wednesday, Thursday, and then Friday. Wednesday, we saw that big bounce which came through, 200-point bounce. Thursday, there was a 200-point sell-off. Yeah. And that is, and today we had a 200-point bounce. So, I mean, actually, I was just, Ramesh, hi. I was just asking Ramesh, क्या लगता है? You know, तेजी लगती है, मंदी लगती है, कुछ नहीं लगता है. And Ramesh was telling me, कुछ नहीं लगता है.
It all evens out, right?
But
we still perform better than the global markets, right? Yeah. Given all this.
No, and let me just actually put a few points on the table because I think it's very tentative. So oil, yields, and dollar are the three things which actually have been working against us in a very strong fashion, right? I mean, multi-year, actually decadal highs on some of these things. Oil nearly at 3 digits. So we got the first sign on Thursday that maybe these things are starting to cool off a little bit. Some signs of exhaustion, which is great news. We need these things lower, not higher, and we'll find out. Now, very near term, you got, so in the US, the big talk has been whether data is heating up, it's slowing down. So we get a very important data point, which is the PCE number, inflation number, that is today on Friday, which will kind of, I think, add to that debate. And of course, Rima was pointing out the US government shutdown, which is impending. Hopefully, when we come back on Tuesday for trading, the US government would still be functioning. Market consensus, right? And it almost had become a consensus that we are heading into a Goldilocks economy. We'll get a soft landing. At the margin, that is starting to fade. People are not so sure anymore. Jamie Dimon, for example, he was on Shireen interviewed him earlier this week, and he kind of made that same point. So people are not so sure whether we'll actually get that. Remember, Fed has hiked interest rates by 475 basis points in this particular cycle. Can it be that we get a perfectly nice, softish kind of landing without any troubles? We don't know. I went back and looked at the 2006-2007 period. Interest rates were hiked by 425 points back then. I'm not suggesting, I mean, both periods are exactly similar and we'll get a repeat. But, I think some caution perhaps is warranted. We also get into the second quarter reporting season, right? Which I think is going to be important. Remember, Q1, after all is said and done, was not spectacular. It was okay. It was not spectacular. There were lots of earnings downgrades, etc., for full year estimates. So I think the best case, according to me, is if you ask me, maybe we stay ranged without those animal spirits and the galloping higher market. That perhaps is unwarranted at this point in time. Limited downside, but no real sort of not a galloping market.
The spirits have cooled off a little bit. Ramesh, you want to come in on that?